Welcome back to the channel, everyone. Today I've got some huge news regarding CCIV and Lucid Motors. Lucid have just announced a new factory extension that will take their current production capacity from around 30,000 units per year to over 90,000 units per year. I'm also going to be giving a bit of an update on the wider market and the stock market crash, and then talking about a new company, NDRA or NDRA Life Sciences, which was suggested by you guys. So stay tuned and let's make some money. Firstly, let's talk about CCIV, and let's start by going over some recent price action from the last week. CCIV fell from its highs of around $60 per share and fell consistently throughout the week to around $20.40. It then took a little bit of a bounce up and has since been trading fairly flat. Comparing this to the wider market and the S&P 500, the same thing can be seen really. The market was trending down throughout the entire week and then took a little bit of a bounce back up on Friday. I can't say for sure whether we're out of the woods yet. It's only been a day or two. I think we'll really know whether the correction has resolved itself after the end of this week or maybe even sometime next week. I think CCIV is currently being held down by the wider market, just like most stocks are really. And I think when this current market correction is over and the S&P 500 is back up at its highs, I think CCIV will rebound to around the $30 to $40 region. I then think the market will react favourably to the increased production capacity and the new charging partnership, and the CCIV stock will start moving back up towards that $50 to $60 mark. So let's talk about that increased production capacity. Lucid Motors have just received approval to commence expansion of its production facility from the current 820,000 square foot that the property is to a whopping 2.4 million square feet. With all this extra space and all the additional machinery that this facility can house and all of the new employees that will be able to work there, production capacity will increase from around 30,000 vehicles to a whopping 90,000 vehicles per year. This one expansion will mean that Lucid Motors will manufacture and potentially sell more vehicles than NIO currently do. To put this into perspective, NIO currently have a market capitalization of around $55 billion. Pre-correction, NIO had a market cap of nearly $100 billion. The CCIV and Lucid Motors deal was announced at a pre-money valuation of nearly $12 billion and a post-money valuation of around $24 billion. This post-money valuation of around $24 billion and 1.6 billion shares in issue gives Lucid Motors an expected share price of somewhere around $15. If the market capitalization increases from around $24 billion towards $100 billion that NIO once was, that would give CCIV an expected share price of around $60. I personally think that this expansion of the Lucid Motors facility will come fast. They've already applied for planning permission and it's been granted. Peter Rawlinson also said himself during a recent interview that he expects to spend around $10 billion over the next 4 years. Therefore, over the next 4 years, I expect Peter Rawlinson and Lucid Motors to build their Chinese facility, to build their facility in Saudi Arabia, to expand phase 2 of their current production facility, and maybe even expand to phase 3. The deal presentation also suggests that they will require bridging finance of around $600 million until the transaction closes. Therefore, Lucid Motors could be working on phase 2 expansion right now as we speak. If you're enjoying the video so far, be sure to subscribe to the channel by clicking that red button down below. Also, be sure to check out the Patreon, link down below, to become part of the team and discuss stocks before they start blowing up, like EHang, BNGO, CCIV, and more. You also get access to my stock portfolio, which is updated daily, weekly live streams, one-to-one access, and more. But for now, let's get back to the video. I also want to quickly touch on the behaviour of the wider market that we saw on Monday before I talk about our new stock, NDRA. We saw a very good rally out of the gates for about 2 hours, continuing that rally that we saw on Friday. The wider market then traded flat for a little while before giving up all of the day's gains and then some. The market continues to be volatile, and I think it will be for most of this week and maybe even some of next week as well. The Senate recently passed the $1.9 trillion stimulus bill, and it has to go back to the House for a final vote before being signed by President Biden. It's rumoured that stimulus checks could be received by as early as Monday next week. This would cause an absolutely massive flow of money into the market, and I would expect to see the S&P 500 back up at its previous highs within a few days to a few weeks of the checks being received and deposited. I think that recently I've been seeing that a lot of people are complaining that ABC stock is moving downwards and not upwards, or XYZ stock had great earnings but still had a red day. And I think it's important to remember that it's not just that one specific stock that's behaving a bit unusually or having a bad day. It's pretty much the entire market that's going through a current correction phase. I think that going forward, the market will normalise itself to the potential increased inflation, increased interest rates and bond yields. The chip shortage won't last forever, the water levels in China will go back up, and manufacturers will continue clearing through the backlog of chip orders. The stimulus money will enter the market, the post-pandemic recovery will continue, and stocks will trade higher. I think that providing you're holding fundamentally strong companies that you believe in, that you should continue holding these stocks and continue averaging down your costs. If you want to pick up some shares in CCIV or NEO or maybe even Tesla at these low prices, then be sure to sign up to free trade using my link down below in the description to get a free share worth up to £200 when you invest a minimum of £1. Yep, that's right, you only have to invest £1 and you will get a free share worth up to £200. Now let's talk about NDRA or NDRA Life Sciences. NDRA is another biotech meditech play, just like SENS or BNGO. However, NDRA has a much smaller market cap than either of these and is therefore inherently more of a risky play. BNGO has a market cap of around $1.3 billion and had a great day on Monday, up around 8% on the day, and at some points during the day was up as high as 18%. SENS has a market cap of around $900 million. However, NDRA is much smaller with a market cap of only around $80 million. NDRA provide photoacoustic medical imaging technology, similar to Butterfly in a way, a company that ARK Invest and Cathie Wood have invested heavily into. Their thermal ultrasound device is currently CE trademarked but has not yet received FDA approval. Now, it usually takes between 163 and 245 days to become FDA approved. However, I guess this could be extended as a result of the pandemic. NDRA submitted their Teus device in around June 2020 for FDA review. Therefore, they should be expecting FDA approval within probably the next month or two. NDRA previously released a Nexus 128 and a Nexus 128 Plus system. However, these were designed for small animals and therefore never received FDA approval for clinical trials on human patients. And therefore, this is NDRA's first attempt at going for FDA approval. And therefore, it definitely doesn't guarantee that FDA approval will actually be received. However, I think that if approval is granted, that this stock could fly fast. NDRA's CEO estimates that around 30% of US citizens suffer from some form of non-alcoholic fatty liver disease. Their medical imaging technology provides more detailed results than a typical ultrasound, results similar to that of an MRI scan, but costs 50 times less to produce the same results. I imagine that as soon as NDRA receive FDA approval, if they do receive that approval, then they'll try and issue new shares and raise a large amount of cash so that they can manufacture and distribute as many of these medical imaging devices as they physically can. The Teus technology can be used with any B-mode ultrasound machine. Fortunately, B-mode ultrasound is the most common form. And therefore, not only will NDRA's product be generally useful and generally helpful to the medical industry by making the detection of non-alcoholic fatty liver disease more cost effective, it will be genuinely viable as well. Personally, investing in a company with such a small market cap that receives little news attention isn't something that I usually do, due to the heightened risk and unclear future. However, I think that this is a very attractive short-term play to get into pre-FDA approval. Medical companies typically run 100%, 200%, 300% or even more upon receiving that FDA approval. And therefore, if NDRA do receive the FDA approval, I think the stock price could hit somewhere between $6 to $8. If the stock does hit that area, I would definitely be locking in a lot of your profits. And as always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!